Welcome to the final episode of this 5 series of the best way to make money in 2024. Let's start trading this trading plan. Last week I showed you exactly how to create a mechanical trading plan with the concepts that you can learn at NJT. Now it's time to put the theory into practice. Today I'm going to show you exactly what proper trading looks like and exactly how to trade our repeatable system to make consistent money in the markets. The 10 series. We will keep saying this until we're gone. A 10 series is a way of thinking in probabilities, which is essential for you to trade effectively. We focus on a series of 10 trades at a time instead of an individual trade so that we can remain focused on the process of executing our system perfectly, not on the results of every single trade. Then we see the results at the end of those 10 perfectly executed trades. You guys have heard of that term, the house always wins. That's a casino term because when the people play their games, it's rigged. So the odds are always in their favor over a large enough sample size, meaning it doesn't matter how many people win, they will always win longer term. So we can take that same understanding into our trading and think in a series of 10 or 20 perfectly executed trades so that we can use that game of probabilities to our advantage. And if we think of that perspective from the markets, if the markets are trying to take our money and we are the casino, it doesn't matter how many times we lose, as long as the odds are in our favor and we have a large enough sample size and we have risk rewards that always have a positive expectancy, we're always going to win over a large enough sample size. So what I'm going to show you is day by day, every setup that's in the trading plan, and you guys can see this. I'm not just picking them out randomly. We have the plan. You guys have seen what the rules are. You guys know what the entries and exits and management are. We've been through the examples and you can see how it's repeatable and consistent. I'm going to show you today what this trading plan looks like using the repeatable concepts that we created in the plan in the last week's episode. Wins, losses, and missed opportunities. So let's dive in. I remember I said to you guys last week, there's 4 key elements to building a trade idea. Structure, and we use that for direction. RAMC we use for the narrative and intention and direction. Location, that's important to understand when we're in a trending market, we want to be pulling back into premium or discount. And time frames, we want to be looking for those higher time frame locations and then looking on the 1 minute so that we can zoom in and execute those with a precision entry. So just starting here on the left, we can very clearly see that price was in this trending market. We got that bearish initiation to the downside. That's created a swing high in the market. And now we're waiting for price to slow down so we can start to anticipate that next swing low in the market. So as we can see, price has slowed down into a sideways range here at a point of mitigation. And when I say at a point of mitigation, all this green area is a sideways range, right? We know that there's orders inside sideways ranges. So when price comes back into these areas in the future, we need to see a reaction here because lots are leaving the market or they're going to create new lots in the market in order to move price in their intended direction. So when we start to see price slowing down and moving sideways, this is a perfect opportunity to look for our structure and look at good locations to take sideways ranges from. So looking here, we have a sideways range created here, followed by an initiation to the upside. So we know that when price gets back into this point of mitigation, we can look for continuation to the upside. So we have built our trading idea, right? We've got sideways range here, initiation, we've come back here in the future to play that mitigation and continuation phase. That's building our narrative for higher prices at the moment. When we think about where price is based on this A to B, we're at low prices, so we're making sure that we're buying low overall. When we're in the structure as well, we're in a sideways range, so we're looking at buy low locations within the sideways range as well. And we have our higher time frame set up, so now we're zooming into the lower time frame for entry. So this ticks all the boxes for a high probability trading idea following our trading plan. So with that being said, let's now zoom in to entry and how we could have entered this. So now we're down here on the 1 minute chart. Now we're going to go to the section that says how I will enter this trade on the trading plan that we created last week. And all we're doing is looking for RAMC pattern, which is a sideways range here, followed by an initiation to the upside. We're looking for that pullback mitigation continuation and a safe stop loss. So let's do that now. Remember, when we take the range, we're looking for the highest point of the range and we're looking for the lowest point of the range before price initiated to the upside. That's going to be our entry area. Now, when we look at stop loss, remember, stop goes underneath the range low. That's a safe stop. And of course, you could have entered at the open here with a 5 pip stop. If you wanted to go for a 4 pip stop max, obviously then you could have potentially got involved in this trade as well. And that's something that would have played out for a positive risk to rewards. Now, if we were looking for the 1 to 10 risk to rewards, this would have come back and taken us out for break even. But again, as long as you've got a positive expectancy on your risk to reward, you can look to make profit. So if your risk to reward is 1 to 3, 1 to 4, 1 to 5, so on and so on, this might have been a trade that would have played out for you. But again, just using the same repeatable and mechanical process that we use in our trading system. So that was the first opportunity that you could have looked to get involved in, again using all the framework and understanding. We're at that point of mitigation. All price done was created that larger sideways range that we see here. So again, if we were looking for more opportunities during the session, this could have been another great opportunity here to look for that continuation. I know loads of traders messaged us from YouTube and said that they got involved in that as a continuation to the upside. So well done to all of you guys that got involved in that trade. That's a beautiful range, initiation, mitigation, continuation play, and playing right at the edge of the sideways range as well at the point of mitigation. This is perfect that you guys are seeing this as well in the moment ahead of time. This is exactly what we want you to do. So let's move on, right? We've gone from a sideways range structure that we can see here now into a trending structure. So back to building our trade idea. Structure is currently bullish. We've got a sideways range here created at a discounted pricing, so we can build a narrative of range, initiation, mitigation, continuation, and we know that price is going to target this high for that continuation if we do continue. We're buying low in this continuation, and this is a higher time frame range, and now we're going to zoom in on the 1 minute chart to look for that pattern and safe stop loss. Down on the 1 minute chart here at that point of mitigation, let's just play this forward, and what can we see, right? Price is contained sideways in this range here, sideways range, and initiation to the upside. So all we'll be doing now, once we have our pattern, is looking for price to pull back with a safe stop loss underneath the low, and that's our continuation entry here to the upside. So now price to pull back into the sideways range. Again, all we're going to do is look for the whole sideways range, and we're at that point of mitigation now. So this would become your entry here at that point of mitigation. Remember, stop underneath the low, so it's a safe stop. Obviously this one here, you might have had a bigger stop loss at 5 pips, but you're looking for that continuation to the upside. And if we're playing that range, initiation, mitigation, continuation, this high is that next target for price. And again, we always look for those 1 to 10 risk to rewards. Again, if you have a smaller risk to reward of a 1 to 5, 1 to 4, 1 to 3, so on and so on, that's also fine as well. Just keep it consistent and repeatable in the markets. But again, pattern and safe stop. Let's keep it as simple as possible. When price breaks this high here, that's when you move to break even and let the trade do its thing. You've done everything that you need to do for this trade now. You've moved to break even within the management that's also in the trade plan, and this is a trade that's potentially going to play out. So we had one trade that's a break even. Now we use the same repeatable process again, and this is a trade that could potentially play out to the upside. And how easy have I made this for you guys to make money in 2024? I've showed you the why behind exactly how we trade. I've showed you who's in control of the logic behind the system. I've showed you the repeatable concepts that we use. I've showed you how to put all of that information into a mechanical trade plan that you can make money with. And I'm showing you now exactly how to trade it. I've done all of this for you. You only need to apply yourselves to learn and experience more. And what better way to apply yourself than joining the NJT community full of traders all focused on one pair, communicating and learning every single day in our live trading floor, so that you can get in the moment live support and answers you need to continue to progress and develop as a winning trader. We've created a trade floor for only experienced NJT traders as well, so that you can learn from the most experienced traders that we have with us that have been with us for years. They are consistent with the RAMC strategy, showing you every single day how to apply these concepts in a repeatable way. So just zoomed out here on the 15-minute charts just to show you guys it's the same repeatable process and the same repeatable concepts. Keep it as simple as possible when you're going through these trades, and just take pictures of these, right? So you can start to repeat this. This is nothing random. This is all repeatable. And the amazing part of this is you guys are seeing how repeatable it is. So let's move on now. This was our structure that we previously had. This is that A to B here. So now let's just move these. This would be this A to B structure down here. Remember I said when we create that swing low, we've got our A to B swing. So now we're looking up into this premium price. What have we got? A sideways range up here as well at premium prices. And we've got this inside bar here, which is a representation of a sideways range on the lower time frames. So we'll be zooming in here on the lower time frames, and this is where we're going to be looking for our pattern and our safe stop loss. So now we're at this point of mitigation. Again, all we're doing is looking for our pattern. We want to see price starting to move sideways. We can already start to see that, right? Price is contained here sideways at the moment. So again, all we're going to be doing is looking for that initiation, which is that aggression and speed in one direction, and then we can play our range, initiation, mitigation, continuation pattern. So just playing it forward, we can see that now we have our range and initiation here to the downside at this point of mitigation. It's really important that we're seeing this at the point of mitigation, because this is where we expect price to react. Now when they're creating more orders in the market and we see those orders showing in their intention to the downside, that's where we can play our pattern for that continuation to the downside. So again, put all that on. We could use a 3.5 pip stop loss on this, playing the average of the range for that continuation to the downside. Now let's just play this forward. Tapped into this trade, and what happens? Price takes you out. And that is a part of proper trading, right? This is exactly what we do. We play our repeatable entry pattern. Sometimes it plays out, sometimes it doesn't. What's important is that we do the same process over and over again over a series of 10 or 20 trades, and that's how we get the result in trading. So this goes down as a loss trade, and we continue on to build our next high probability trade idea. So then what do we see in the market? Let's fast forward, right? That's 1 week's worth of trading. You would have got 3 trades opportunities with the system. One would have been a break-even trade, one would have been a winning trade, and one would have been a loss trade. So overall for the week, you would have made 9% if you had traded this system absolutely perfectly, exactly how it's supposed to be traded. Cool, so let's fast forward, right? We've just taken a loss on that trade, that's absolutely fine. Then what do we see? We see a new A to be created in the market. So we can very clearly see that price is bullish right now. We've waited for price to create that swing high. So now we're setting up for our next entry, right? We've got our A to B. So we've got our structure being bullish. We've got a sideways range here at a discounted price that we can look to play from the higher time frame. And we've got that RIMC in play as well, range, initiation, mitigation, continuation. So we know that price will target this high if we're in that continuation to the upside. And we're buying low. So we have our setup created in the market now. So now it's about when price gets into this area, let's zoom in on the 1 minute chart, and we're looking for that RIMC pattern with a safe stop loss. Keep it as simple as possible. And all we have to do is follow our trading plan. So we can see here, price has come into that point of mitigation. So this is where we're going to zoom in on the 1 minute chart now. So zooming in here on the 1 minute chart, price is contained here sideways, and now we're in that initiation phase of price. It doesn't matter how far the initiation goes, it could go right up here and then start to pull back. All we want to do is identify range and initiation in the market, so we know that when price gets back into this location in the future, this is where we're going to be looking for our entry with a safe stop. So now we can see sideways range and initiation here to the upside. We know exactly where we're going to be looking for our entry. Highest point to the lowest point of the range here. Remember, this is the highest point of the sideways range. This is the lowest point of the sideways range before price breaks out here to the upside. So when we're thinking about a safe stop loss, it needs to go underneath the lowest point of the range, because any of these orders inside the range that are created here or here could be reacted out from. We don't know which orders are going to be reacted out from. We just know there's orders inside this area. So that's why we need to put our stop underneath the sideways range. Again, if you're anticipating a continuation to the upside, then you can use quite a bigger stop loss, because we're waiting for price to run and take out this high, which is up here, which is that B. So obviously we look for those 1 to 10s. If you wanted to trade price to the swing, playing that continuation, obviously you could look for those bigger risk to rewards there as well. But we always stick to those 1 to 10 risk to rewards so that we can keep our system as consistent as possible. Also guys, just remember, you don't need funding with this strategy. I think a lot of traders want to go down the funded route, and if that's the route that you want to go down, then go for it. But because we have such high risk to rewards and you're compounding at such a fast rate, you can trade your own personal accounts and still reach your financial goals. And before funded accounts were even here, that's what everyone was trying to do: trade their personal account, become consistent with their personal account, and then look for someone to invest in them in the future. And that is still, in my opinion, the best route to go down. Because trading on your own account teaches you how to trade properly and how to trade consistently. So let's play this forward. Obviously you can either use this as a limit order, or you can use this as, a market execution when price gets in here. Just make sure that the stop is below the low. I don't want to see any people start to execute trades here with their stop not protected. Your stop always has to be protected, because remember, we're playing a pattern and we're playing a safe stop. That's the only two things you need to worry about when it comes down to entry. Again, when price moves above this high for that continuation of the range, initiation, mitigation, continuation, that's when you move your stop to break even. Mechanical rules in the market. As we see, price is reacting from this sideways range that we have here to the left. We move back into the sideways range that we've created here as well. Now price is starting to react from the same area twice, and this is why we don't move our stop until price continues, because we can react from the same orders multiple times and then still see a continuation to the upside. And obviously now we saw that continuation. So price takes out the high, you move your stop to break even. Again, following the rules, being as mechanical as possible, and then obviously we just wait to see if this goes on to see that 1 to 10 continuation to the upside. So back to the 15-minute chart now, and obviously then we can see that price ends up seeing that continuation to the upside. And again, that's another potential trade that would have hit that 1 to 10 take profit, just following the repeatable system and the repeatable rules in the market. Okay, so moving on. So what do we see already in the markets? We've got a sideways range created here, followed by initiation to the upside. So now when price comes back into this sideways range, we can either play this for a higher time frame at the open to see continuation to the upside, or we can look for the specific order inside the sideways range that price could react from in the future. Remember, all we're doing with RAMC is creating a narrative. So that's all we need to do. We've got bullish structure created in the market. We can see the higher highs and higher lows created in the market. So we know that the structure is bullish. We're still looking for price to continue up into this high to play that continuation to the upside. That's building our narrative of higher prices. So now all we want to be doing is making sure that we're buying low for that continuation there to the upside. So price pulls back into the open of this sideways range here, and this is exactly where we'd zoom in here on the 1 minute chart and look for our pattern and entry. So as we can see here, sideways range created at that open of the sideways range on the higher time frame. So again, all we're doing on the 1 minute chart was zooming in for our range and initiation, mitigation, continuation pattern, which we have here, sideways range, initiation, and we're looking for a safe stop loss, which is underneath this low here as well. So again, a 4 pip stop would have put you at the 50% of the range here, and now we're looking for continuation to the upside. So let's just play this forward. And as we can see here, this is a trade that didn't play out. That's absolutely fine. Again, we're playing that repeatable entry system. It's not about a single trade. It is about trading the same pattern over and over again, building the same trade idea in the same way over and over again. And we get the results of that over a series of trades. That is how we think in probabilities. And that is how we win consistently in the market. The consistency is not about winning every single trade. It's about trading the system the same every single time and getting the results over a series. That is how you become consistent. And as we see when we play it forward, we wasn't wrong with the direction and the higher time frame narrative. We were just wrong with the entry, and that's absolutely fine. So let's play this forward and continue. We've now also achieved our target from this range, initiation, mitigation, continuation that we see here. Price takes out that high, so that was a very clear narrative for 2 days for continuations to the upside. And now we can also see that price is still in this bullish trend, right? We got that higher low created in the market, and we've got that higher high created in the market as well. So again, same process. We have a sideways range here, followed by initiation to the upside. That's created our A to B in the market, so let's put that on as well. A to B in the market. We've got sideways range, initiation, so we're looking for that pullback, mitigation, continuation, and we want to make sure that we're buying at discount. So we're going to be looking for ranges or OBs created at a discount price. We can see we've got a range here between the candles as well. So when price gets into this location in the future, again, we just zoom in, and this is where we look for our pattern. So we see here in the future, price gets into this point of mitigation and we start to see a rejection. We can go down to the minute chart now, and this is where we're going to be looking for our pattern. What can we see? Price is in a sideways range, so we're going to be looking for initiation to the upside, mitigation, continuation. So we see the initiation out of the sideways range. This is exactly where we want to look for that pullback and continuation of higher prices. Again, stop safe underneath the range low. Could have got a 4 pip stop on this trade if we're looking towards the average price. And what I'm looking for in these sideways ranges is I'm breaking this down into the 50% area. So price is more likely to react from around the 50% area. So if I can put my entry just above the 50% area with a safe stop, and it still not be a massive entry, then we can always look for those high risk to rewards. So that's what I'm doing when I'm looking for that entry. And as always, we look for those 1 to 10 risk to rewards. And if we're playing that higher time frame range and initiation, mitigation, continuation, this will become the first target for that continuation to the upside there as well. Price pulls back into the sideways range. This is where we expect price to react. When price takes out this high here, That's where we move to break even, and then it's job done for us. So there we go, job done for us. And now it's just about if price plays out and sees continuation to the upside. And as we see, that's another trade that could have potentially played out there to the upside as well. And I hope you guys can see, right? All I've done is just taken you through opportunities where price has seen continuations during the sessions. I've showed you guys the trading plan. I'm not making this up. I've been trading these markets for over 7 years, and I've been only focused on Euro USD for the past 4 years. So for me to create a trading plan like this that is simple and repeatable and mechanical is very easy for me. So it's amazing for me to be able to show you guys how simple trading can actually be as well. And I haven't just got like this just because I've been working a couple of hours a day. I don't want to just be good in trading. That's not good enough. I want to be the best, and I made sure that I wanted to be the best. So I worked day and night. I constantly improved. I think about trading all the time, and I constantly reaffirm how good at trading I am. And this is exactly what it takes if you want to become the best in trading. This needs to be you day and night. You need to be constantly on this. But then eventually, it will become very consistent and repeatable for you, and it will become effortless. And that's what I want to help you guys to do. This is what we do at NJT. We want to make sure that you guys can make trading as effortless as possible, and we'll guide you through that journey. And what better way than to learn from people that have already done this, that already put everything into this trading and consistently put everything into their trading as well. And all I've done here, right, is just taken you through a week and a half worth of opportunities. It doesn't matter what week we go down, we can always find sideways ranges or trends within the market, which means we're always going to get opportunities to play trades at great locations and build high probability trading ideas using the process and the plan that I've showed you in episode 4. Thank you guys for watching. If you haven't checked out episode 4, which is very much linked to this episode here, make sure you go and check that out now. Also, check out our course on the YouTube as well. We've put every single video into each section. So whether it's entry, structure, you want to see more of RAMC, we have specific playlists that you can go and watch so you can build up your skills in those areas as well. Thank you very much for watching. This is the last episode in this series. I hope you've all taken some value from this series. And this has been the best way to make money in 2024. Welcome to the last part of the psychology section in this 5 series. I just wanted to remind you guys that trading does take time to get to what you want, and try as hard as you can to have that long view in trading and align your daily habits with that long view. So whichever path that you decide to go down, whether you want to go for the funded accounts or you want to create your own account and trade your own account, just sit down and have a look at what 2024 could actually look like for you. If you was to put in the work every single day, every single month, be really consistent and disciplined and focus on building your habits day after day, what could the end of the year look like for you? If you're trading your own account or you haven't started trading your own account, maybe put some money in your own account now and just start to think about if you was to make 10 to 20% a month, what that could look like by the end of the year, compounding on that account. Sometimes it's really about visioning what that future could look like to make it easier in the moment to make those consistent decisions. And unfortunately, a lot of this funded account stuff has made a lot of traders think very short term and think about trading such large capital in such a quick amount of time, when realistically, if you think you can see your entire month's wages disappear in a single trade, trading on these large accounts, and not feel something and take that into the next day, then you're mistaken. You have to build to that amount of capital, whether that's starting on a very comfortable amount, something like £100 for a risk for you, and you might be comfortable with that. You have to scale it up. Start with 100, then when you can execute 10 trades perfectly on 100, then go 150 and build up your comfort levels until you eventually can risk those thousands, 2,000s, 5,000s on a trade and comfortably lose it and come back the next day and execute your process exactly how it's supposed to be executed. Because if you can't do that yet, then you need to start building up. And unfortunately, this is what those funded accounts have done to a lot of traders. They've built the idea in traders' minds that they can start trading straight away on very large capital. But that takes you completely out of flow state with your process and puts you into an outcome state of mind, which is where a lot of those expectations and frustrations come in. So that's why I always say trade on your own account, focus on your own account, focus on building your own account with good habits and good trading. And then you can add on those funded accounts at a later time. There's no need to rush into funded accounts. Give yourself a target of 4 to 6 months of consistent trading and consistently scaling your own risk on your own account, and then start to add funded accounts. They should always be an addition to your main account. And if you find that you're trading and you're feeling frustration after losing a certain amount of money, then scale down and take your time with it. This is why trading has to be a long game and not a short game. So you can put yourself in a place where you focus on the process of trading and performing at a high level consistently. And as a byproduct of that, you will make consistent returns and you will scale up your account quicker than you can imagine. So focus on that for 2024. Focus on what that whole year could look like if you was to just take your time with it, not be in a rush, and focus on learning and developing your skills so that you can have that bulletproof mindset where you can trade on whatever size, you can lose whatever money, and it doesn't affect you and it doesn't affect your next day's performance. And that's where you'll really get into the flow of trading. That's where you'll really get into the flow of the market. That's where you'll be able to look at the market from an objective standpoint. And that's what we all want. We all want that consistent progression. That's what makes us feel good about ourselves. And trading doesn't always give us that instantly, but as long as you're doing exactly what you're supposed to be doing every single day and you're executing your process perfectly, you will see that consistent progress. And progress does not always mean making money. Sometimes progression is not getting into the market when there's no trading setup presenting itself, and that is also progression. But that's looking at your progression from a process orientated mindset, which is the mindset that you want to always be in. So I hope that helps you guys. If you want to hear more about the psychology of trading, obviously let us know down in the comment section as well. You should now be set up in the best place possible to make money in 2024. I've given you everything that you need. Your only job now is to get around other traders that are already doing this so that you can consistently learn on a daily basis. Make 2024 your best year of progression yet. Thank you guys for listening, and we'll catch you guys on the next video.